Hello, I'd like to welcome you to my YouTube channel where I analyze Forex pairs for better results. Today we are going to look at EURUSD and we're going to analyze it, and I hope our whatever we do today will bring about a good improvement in our trading. The first thing that we have to do is to open daily chart of this pair. So this is the daily chart of EURUSD. It's a very simple thing. In case you are on something else, you just go to, you open the EURUSD chart, and then you go to your time frames and choose daily. Now after that, we have to add the 200 moving average, exponential moving average. To add it, we just come to this place, indicators, then trend, and then we select the moving average. Then we set the parameter. Since it has been specified that we should use 200, we fit the 200 there under this place, choose exponential, close, and then apply. Now we like to use 200 moving average because it's a very powerful tool that indicates the direction, the next direction of the market on a daily chart. And also we like to use daily chart because it's very good for a forex trader to always examine what is going on the daily chart before even switching to any other time frame. Then the next is to determine the current trend. Yes, the power, like I said earlier, that the moving average helps to determine the direction of the general trend. Since we have the price, the current price, a new candle has opened for today, being Thursday. This was the activity that happened on Wednesday. Now just opened now for today, which is Wednesday of June. Now the price is moving above the moving average, so we are in a bullish phase. We are in an uptrend. That is the general direction of the market for now. So what do? We sell in an we buy in an uptrend. We buy low in an uptrend so as to maximize our profits. The next thing is, since we have determined the current trend, we have to draw the trend line on that same chart. Yes, it's always good to know how to draw and use Trendline. I've made videos on how to use Trendline. I did about 4 videos on that, and I think it will help you when you just take a look on any of them or all of them as well. Now this is the trend line. You join swing low to swing low. Then we have a bullish trend line. But what we see here is that we are having, let's say, 3 candles now. The first, let's say we're even having 1, 2, 3, 4. This candle, this is a Thursday, Wednesday, Tuesday, and Monday. So this Monday candle opened above the moving average, but struggle to close below it unnoticeably. Now the Tuesday candle here opened below the bullish trend line and closed below it. Now the Wednesday candle opened below the trend line and closed below it, but it is a strong bullish candle, so it is giving us mixed signals for now. Now we look at today just opened again below the trend line. This is all that we have on the daily chart. Good. So the next thing is we switch to 4-hour time frame, and when we get there, we draw the counter trend line. Okay, what do we mean by counter trend line? The trend line on the daily chart is bullish. So, and then you know that in an uptrend we try to buy low. So to buy low, then that means we need a move, a counter move that is in opposition to the prevailing direction. The prevailing direction here is bullish, so we are going to look out for a bearish dip, a bearish movement and we can only get that for now on the lower time frame. So what do? We switch to the 4-hour time frame. Then this is the 4-hour time frame. Here we have this swing high, although it's a falling one. So we draw the minor trend line, counter trend line, which is in opposition to the prevailing trend. Good. So this is the counter trend line on 4-hour, and you can see the beautiful scenario that we have here. Okay, now we are doing things according to the task that I have prepared. We have drawn the counter trend line, then so we should watch out for a breakout beyond the minor trend line. Now, since the major trend is bullish, and then you can see that the bullish movement is being supported, is being further confirmed by these 200 EMA. You can see what happened here. Price was falling until it lands on the 200 moving average and bounced up immediately. And 1, 2, 3, see the candles, they were moving progressively higher. Even when they got to the minor trend line, there was no much struggle. It broke above it. Now that means we have resumed the bullish trend. Okay, we have resumed the bullish trend. We have a bounce off the 200 moving average. We have a break of the minor trend line or the counter trend line. So that is enough reason for us to confirm that we are still in a strong bullish trend. Now we have done that. Now what else do we need to know? We need to know we have known the trend, and the trend has been confirmed. The next is to suggest entry price and take profit level. Now how do we enter this market? Of course, an aggressive trader would have entered immediately. The price broke away, or they broke beyond this minor trend line. But a conservative trader will wait for price to close above this, which has happened already. Price has successfully closed above the minor trend line. So the next thing is to buy now that the market, that another candle has opened. So we buy now. So we have gotten the entry price. The entry price, or the entry now, is the price that we find ourselves now, the open of today. Now, so we have entered. Then the next thing is, where are we going to put our take profit? Because even though we are in an uptrend cannot continue forever. Now we have to switch back to our daily chart. Now on this daily chart, now you can see what we have. We have the resistance here, which is 1.1282. We have resistance here. We have a resistance here, which is 1.1211. We have another resistance here, which is 1.1171. Okay, so now, but we are on 1.1166. So the point that we would like to target now, if this movement continues, is this high, which is 1.1295. Okay, 1.1295 is a very good point to target. Now, as a trend line, a trader that uses trend line, let's switch back to our 4-hour time frame and determine our stop loss. Since we are bought here, which is the open of the new candle after this confirmation, but I trade aggressively. I bought right at the break of this candle, this trend line. So I placed my stop loss immediately about 50 pips below my entry price, because I buy immediately the price breaks above the trend line by 5 or 10 pips. So my stop loss is 50 pips from my entry point. Now I will place a trailing stop. Although I have a target, which is the target actually is 1.1295, but I prefer to use trailing stop. The trailing stop is my protection. It does not only protect my capital, it also protects my profits. Right? I always like to go out of the market in profit, so that's why most of the time I use trailing stop. Right? So I think I've been able to bring out the point here. We've entered the trade here. We have our stop loss. Then our ultimate take profit level for now is the high of this candle, which is 1.1295. okay, but it's very important that we develop the attitude of using a trailing stop. I hope the analysis has been helpful a little. I thank you for watching. I will appreciate it very much if you can always leave your comments and subscribe to my channel. I'd like to see you again in my next analysis. Of course, this analysis is subject to modifications since market is dynamic. Thank you very much.